talking briefly about the Bitcoin, and specifically more of the Bitcoin madness that's happening around Bitcoin marketing all-time high we're seeing, thanks to the political system that's now trying to leaf and is, in the U.S. starting to see crypto as a good thing, which obviously we've always known in this space that it is, in the sense, and we always knew, and I've always been saying that political leaders will always be adopting this as soon as they see it's in their interest. And we've even gotten wind now, after yesterday's launch of the Ethereum ETF, we now see that in the news, Gary Gensler, right, the guy that runs the SEC, said that he might be leaving by the end of this year. At least that's what's in the tea leaves. Let's see if it actually plays out. But apparently the rumor is that he'll be out by the end of this year, which to all of us in crypto is like, yay. On the one hand, this guy that came in who knows about the blockchain tech and all that stuff, and taught courses about it, right? You can watch those online, even on YouTube. They're even available, where he taught years ago courses about blockchain technology and Bitcoin and everything else. Became the head of the SEC. Ostensibly was a friend to the concept of crypto. Turned out to be basically a big drag. But to his credit, I know a lot of you won't like to hear this, but to his credit, you can argue that, look, kicking and screaming, he made it possible for Bitcoin to have an ETF and for Ethereum to have an ETF. And although I am not a proponent of those derivative assets, because they basically are paper Bitcoin and paper Ethereum, which mean they're not real, right? So there can be an infinite supply of them, or at least a massively abundant supply, right? That said, it does allow for the onboarding of a lot of people into a synthesis of the space, right? So they're synthetic assets, they're not real. You can't, if you hold an Ethereum ETF, it doesn't mean you actually have an Ethereum, right? Yeah, you could cash it out in dollars and then immediately buy an Ethereum with it if there are any available, but, the actual underlying of an ETF is just a piece of paper or a note in the computer, right? It's not an actual Ethereum, just like an underlying of a Bitcoin ETF isn't an actual Bitcoin, right? Yes, the company that sells it to you has to have a certain amount of Bitcoin to sell you that derivative, but that doesn't mean that they have to have one for one. Right? They can be like a bank and have like one for 100, and they don't have to necessarily give you when you cash out in that underlying. But still, to his credit, these people in the institutionals were trying to get Bitcoin ETFs for 7 years or more, and same for Ethereum, 5 years. And then asking one Ethereum ETF, and to his credit, in less than basically 7 months, in like 6 months really, he got out the Bitcoin ETF and the Ethereum ETF. So if nothing else, he did that under his watch at the SEC. Again, is that good for the crypto space? Personally, I don't really think it's that great, because I think that, it's just another asset for people to sell with options, for example. It's just another asset, for liquidity, great. But again, it doesn't promote the whole Austrian economic concept of a hard fixed supply on an asset, because they can just keep printing more. It's like paper gold. It's not really worth the money that it's printed on, or the paper that's printed on. But nevertheless, people will continue purchasing that stuff and trading it. And okay, now it's 2 major derivatives that are on the market for this new asset class. And, for now, it's bringing in a lot of money into the space. considered the space, even though it's really not, right? It's really traditional finance. It just happens to be marketing a derivative of crypto assets. You know, it's kind of like saying FTX was a crypto thing. No, FTX is an exchange that just happened to let people trade crypto, right? But the reason they crashed had nothing to do with crypto, right? It had to do with the fact that they were running basically a fraud using, resale traders' assets to cover their losses on bad trades that they were making to the tune of billions of dollars, even though they, their customers had signed that they did not want them to do that. Nevertheless, FTX did that anyway, and their collapse, came at a time and that was just right for the prices to drop to a nice cheap discount. And anybody who bought when FTX collapsed is up significantly from then. If you bought when it dipped to below 15,000 and is now above 60, it's like 66K, 67K, whatever it is right now. You've made like 4x or something from that buy. Right? That's significant, and it's on an incredibly rare asset. Hey, sweetheart, what's up, doggy? How you doing? Oh, hey, cute doggy. Hello, doggy. You want to play with the other dog? So bear that in mind. That this asset class contains assets like Bitcoin, which are like the rarest asset on Earth in terms of a liquid asset that has a demand, right, for the very limited supply that exists. Right? There's only 21 million Bitcoin, and right now only 19.7 million of them have been mined. So there's only another like 1.3 million to mine over the next 120 years. Which, if you just were to divide it out evenly, it's like what, 10,000 a year? Right? But it's not that. Obviously, it's getting cut in half every 4 years. So it's going to just keep getting a smaller and smaller amount. Right now, it's more than 10,000. We'll hit that 10,000 a year mark at some point, and then it'll be less than 10,000. And so for 120 years that remain of the mining, like 116 years, right, it's supposed to be like basically fully mined by like 2140, which by then it'll be it's a long time from now. For the life of a simple human being, it's still a long time. But there are also scientists who say, look, given the advances being made in medicine and science, or science and medicine, that there are people being born right now who might live to 200. So if you're making babies now, they might live another couple hundred years, which I know sounds crazy, but when you consider the advances we've made in the last 120 years, when the average age was like 35, and now there's people living well into their 80s and 90s and even hundreds and more. It's not that crazy to think that in another 20, 30, 40, 50 years, science will find other ways during that period of time to keep increasing lifespans and double it again over the next century. So anybody who's born like these days might easily benefit from those things within the early part of their life, within the first 30, 40, 50 years, in ways that could easily double their life expectancy. So 150 might not be a problem at all. Which then raises other issues like, well, what do you do when you have that many people living post, the age of normal retirement? Well, in many ways, if you have access to a limited supply asset and you have enough of it, and that asset has a demand, well, that's good for your future financial interests and may well keep you, financially content for all of your days, even if you live 200 years. So keep that in mind. And yeah, happy Bitcoin. See ya.